The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed. For a full list of current recommendations and stocks owned by staff, members of Intelligent Investor can visit www.intelligentinvestor.com.au.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today from Melbourne is analyst Mickey Mordek. Hey, Mickey.
Hey, Gaurav.
Got the dog right there, do you?
No, he's where is he actually? I would say he was on his bed, but he when I got home yesterday, he'd eaten it. So
Oh, he ate his
sure where
bed.
he is. He ate his own bed. I didn't realize dogs did that, but there you go.
No, I
It's
did not either.
it teaches me for leaving him alone for a few hours.
Well, I'm sure we'll hear from your dog during the podcast, just as we're going to hear from our Vancouver correspondent for the first time in ages. Graham, are you there?
Hi, Gaurav.
Wow, it's a treat to have you on. Thanks for joining us, and welcome to Stock Take, Graham. It's been too long since we've had you on. Hopefully, you're going to be a more regular guest. Everything okay over
Sounds
there?
good to me.
There's a pretty rough segue there, though. I mean, going from my dog to Graham.
From one stranger of the podcast to another. Yes. All right. Mickey, let's begin with you. Graham, while I've got you, let's start with you, in fact, because you've been covering Tabcorp since we upgraded it a few years ago, in fact, pre-pandemic. And the investment case you laid out was that the lotteries business in Tabcorp was worth far more than it was embedded into the valuation at the time. That appears to be playing out right now. Tell us what's happened with Tabcorp and why the share price is going up.
Well, there's a few different things happening with Tabcorp. There's always these two businesses that you kind of need to separate because they're completely unrelated. They were just smashed together when it merged originally with Tats a few years ago. But anyway, the lotteries business is the main breadwinner for the company. So it has to be one of the best businesses in Australia. It has a monopoly over all of Australia's lotteries except for those in Western Australia. It churns out free cash flow. It's regulated. There's no competition, and you can't get higher returns on capital. Basically, it takes almost nothing to run. The other side of the business is the wagering division, which has always been the problem child for Tabcorp. It's got very cyclical earnings. It also has a lot more competition, particularly online from overseas bookies. And it's just recently got a bid, however, from also a UK bookmaker. But as we were saying in the article last week, it's just completely undervalued the company. We're not even big fans of it. We think that it's by far the worst side of the business. But if you compare it to other bookmakers out there, even the bookmaker buying it, it's just ridiculously undervalued.
Does it surprise you the way this has played out? Because we were all in furious agreement about the quality and the value of lotteries. And in fact, we're not alone. There's lots of other fundies and good investors who recognize the value in that lottery business. But the bid and all the attention is now suddenly on the wagering business. What makes that wagering business attractive to a competitor?
Well, it's attractive to competitors for several different reasons. One is that it is actually a pretty good business in Australia specifically, where it has a lock on the physical points of wagering, so the different tab outlets and the retail side. It's really the online that's got a lot more competition. However, for someone to come in and buy it, particularly with the online side growing so much, you can just pull out a lot of costs from it. And it also, you tend to get better odds out of that, which then can attract more punters because they can provide different financial incentives to new customers.
It's likely then that do you think it's likely that the bid is going to succeed? And what happens to the rest of the company? Does it just sell its wagering business and then become a lottery business, or is this a precursor to a larger restructure?
It wouldn't surprise me if it does succeed, even though I think that there's a very strong case that it's being undervalued by the current bid. Maybe someone else will come in, or maybe the current bid will be lifted to attract the board a bit more. But because it's always been the difficult side of Tabcorp, there's just been a new management that's come in. It wouldn't surprise me if they want a clean slate. They want to just focus on their juicy lotteries business, and they don't have any skin in the game. They don't have a large shareholding or anything. So if they sell it for a little bit below what it's worth and get this difficult side of the business out of their way, you could it's the old Warren Buffett joke that lotteries could be run by a ham sandwich and they'd still make money. So I think that they'd probably want to focus on that and just have an easy life, basically. So yeah, if it does succeed, I think it will be because management just don't want that side of the business.
And why is it taking so long? I guess this is the frustration that I have with Tabcorp. I was a shareholder in Tabcorp, but I sold out in frustration because I thought management was atrocious, and I have this rule about not holding businesses with crappy management. And it's taken so long and so much agitation to get any action on the split. What has been the roadblock or the hesitation, do you think?
I'm not sure what the hesitation would be. Maybe the prior management were a bit more reluctant to, because they came from the Tabcorp side that was mostly wagering, so they would have more experience in wagering. But yeah, we weren't huge fans of Attenborough and his team anyway. So
Oh, you're being far too kind, Graham. They were, I would call them up there with AMP and NAB as some of the worst managers of big companies in Australia.
yeah, it was pretty atrocious. But they combined the two companies, and I think that had some merits. That was
Yep.
on the table for 10 years, and they finally got it over the line through the regulators. So
No, agreed.
I think they can be commended for that, at least. But now they want to get rid of that side of the business anyway.
What do you think if they do sell it off? What do you think that does for the valuation of the lotteries business? And also, what do you think they would do with that money? Would that be returned to shareholders, or would they look for acquisitions or something like that?
God, I hope they don't look for acquisitions. But I mean, there's a couple of different ways that it could play out. One that management has floated is the idea of just spinning off the wagering business. So even if this current takeover doesn't go through, they may end up separating the businesses and allowing shareholders to own them independently. That would, I think, be the better option for everyone, because then the people who don't like the wagering business can sell that. The people that do want to keep the lotteries can hold onto that. But by separating them, it means that each can be recognized for its own merits. At the moment, what you have is the lotteries business, which is fantastic, being kind of constantly clouded by what's happening in the wagering side. So it wouldn't surprise me if wagering does get sold, or they do separate it. It will just mean there's a clearer view of what's happening in lotteries. And I think as a standalone business, people will just put it on a higher earnings multiple, basically. It will be more attractive standalone. It also means management can focus on that rather than being distracted by wagering. At the moment, wagering only accounts for a third of the operating profits, but I would bet that management probably spend 2/3 of their time worrying about it.
Yeah. It just seems like like that lotteries business, because it is such a predictable, money spinner. It seems like a strange thing to have listed on its
Yeah,
own.
I completely agree.
And
Yeah.
then, so
I don't
what?
know.
Yeah.
Why is that? It seems like a utility to me. I mean, I think it's a
Yeah.
productive
It'd
utility,
surely
but
be a sitting duck takeover for a superannuation fund.
well,
Yeah.
yeah, it's had several bids over the years. Everybody loves it. Everyone recognizes what they've got there. But I think it would be harder to take over once it's a standalone business, because it would just always be trading at a premium, I think.
It does remind me a little bit of, we've written up Deterra, which is a spin-off from Iluka, and it's an iron ore royalty business. And a bit like lotteries, it doesn't really do anything except sit there, accept revenue generated by a very stable and safe source, and then decide how much to pay themselves and how much to pay shareholders.
Yeah,
It's it's about as easy as it gets.
Yeah, I think that's very similar to what lotteries is. I love the old quote that lotteries are just a tax on people bad at maths.
Yeah, yeah.
And I think it's true that it just pumps out money with practically zero work in terms of actually running the operations. It's just a cash machine, essentially.
And so,
And it's not going to go out of fashion. Lotteries, there was a little bit of disturbance a few years ago when synthetic lotteries were around, but that was banned recently. That's where people can strangely bet on the outcome of the lottery rather than participating in the lottery themselves.
oh wow, okay.
Yeah, but that was banned through campaigning by Tabcorp a couple of years ago. So that's really the only competition that's ever developed for lotteries, and it's gone now. So they've still got their monopoly.
And I suppose the risk really is just around renewing those lottery licenses every 20 years or so, right?
Yeah, the risk is. I mean, it's not necessarily a risk because it's a known risk. They have it's very much like a miner in that it's depleting its mine as it goes,
Hmm.
and so it has to. Although it throws out plenty of cash each year, it has to every 10 to 30 years has to rebuy these licenses. But it also has an edge compared to other operators because it's the incumbent. It already has all the systems in place. It has all of the operations there, so it can run the show cheaper than other parties. So it can usually bid higher, and that's been what's happened.
Why do you think they've never had a go at buying Jumbo?
I don't know. Well, they own 10% of it, so they do have a stake in the company, but probably just because Jumbo was always overvalued compared to kind
Well,
of Tabcorp.
it's gone up
But
a fair few times, so if you bought it early, probably they would have done pretty well
yeah,
out of it.
but when you think about why it's gone up partly because of Tabcorp's generosity, that they were an exclusive distributor for the lotteries business, and if lotteries cut that contract, it would have until now because Jumbo's got a few other things going now, but I mean there wasn't really any value in Jumbo. It was all in the contract that it had with Tats already. And so if Tats wanted it, it could just cut that contract and then take it over afterwards, perhaps, and then kind of annoy everyone. But it didn't really have to, I don't think. It could have, and we've kind of seen it in the last year. Jumbo was doing a better job online until recently, but Tabcorp seems to have caught up a bit, and they now have a better online online distribution channel for lotteries. So I think they're going to outcompete it in the long run anyway. They don't need to buy it.
Mm.
So, Graham, what do you think? How much do you think this is ultimately worth? It looks like the investment case is playing out. We've got a bid already set up, and a split is probably more likely than not at this point. How much higher can Tab go? What's it worth?
Well, looking at the different divisions, when we sum it up, we think that it's worth about $6.50 a share. And that includes though the wagering division, which we peg at kind of 5 billion or so. At the moment, it's only being valued in the bid at 3.5 billion. So there's quite a way to go before we think the wagering division would be at fair value. Though it wouldn't surprise me at all if they end up selling it for between what it is now and 5, just to get it off their hands. But yeah, Tabcorp overall we think is worth about $6.50 a share
Right. So this
compared to
could
the
go on
current
for a
share
bit
price of
longer.
$5.
Yeah.
Yeah. It's still despite its increase in price over the last little while, we think there's still, or I think there's still room to go.
Mickey, what do you reckon? Interested?
In Tabcorp,
Yeah.
yeah, I mean, I'm always more interested at half the price back in when it went down. But yeah, I mean, it sounds pretty compelling. I mean, I'm deferring to Graham, obviously, but
What I
uh,
would like to do is I would like to buy Tabcorp, a couple of coal miners, and maybe some of the casino companies together, and create a
Just to
really
have a
nice.
socially responsible portfolio.
Yeah, that would be great. Yeah, it'd be interesting to see how all those businesses do actually. But it's been really it's been quite a good piece of research so far, Graham. Well done on Tabcorp. Looks like everything's working out nicely.
Thanks. There's still some way to go.
Now, let's move on to gold, which is something that we don't discuss very much here at II. A couple of years ago, I wrote kind of a rant about why I was not interested in gold and why we should never invest in gold miners, which is something that my colleagues had all been telling me for a long time anyway. So I think I was the last one to see the light. And the gist of that was really that gold is different to other commodities, and you cannot predict the future price of gold because it acts more like a currency than a commodity. The demand is all investment demand. It's very fickle, and the supply doesn't really add to the stock of gold, which is the same as it was, several thousand years ago. Basically, all the gold in the world would fill up 1.5 Olympic swimming pools. It's legitimately rare, and new supply is also quite small. So it's anyone who tells you they know what the gold price is going to be is really lying or an idiot, because they don't. And if you don't know that price, it makes valuing a gold miner very difficult. So we've tended to stay away from this area. And for the secondary reason that gold miners, ever since I can remember, have just been truly awful businesses run by awful management teams, and they've habitually wasted money, sought egotistical expansions, wasted, spent allocated capital terribly, and try to expand output at the expense of profit. That's been the story of gold miners over the last maybe 30, 40 years in Australia. But I would say over the last 5 years, something has changed. Um, you guys probably wouldn't be aware of this, but gold miners have actually turned the corner, and they've been run by accountants, financial types rather than geological types, and they're actually generating decent returns. They're actually prioritizing financial metrics over operating metrics, and capital allocation has dramatically improved. And this is not just one or two miners. This has really happened across the board in Australia, and it's now starting to happen internationally as well, in international gold miners. We've seen a similar thing happen to BHP, Rio, and the big mining companies, and it's now happening in gold. So I think it's probably worthwhile wading back into the gold sector and seeing what these changes have done for the financial returns of gold.
What do you
Now,
think's
before,
prompted the changes?
well, I think it started off with some of the big international mining companies. I think the gold miners saw what was happening in the likes of South 32, Rio Tinto, and BHP, and how the share market, how investors had reacted to that and lifted their share prices up. And a couple of gold miners in Australia started doing the same thing. So Evolution was probably the first, along with Northern Star. They were two companies that pioneered financial returns, return on capital, careful capital allocation. And as they succeeded, the rest of the mining industry has kind of followed them as well. I often see that in mining, and I think in many other industries, it takes one or two businesses to set an example. If that example is successful, the rest of the industry does tend to follow. And I think that's just what's happened here. So
It kind of
across the board.
surprises me because you'd think that you wouldn't need many examples to know that making money was a good idea.
Yes, no, I think that's right.
Well,
I
it's
think
sort of
that's right.
like, I mean, it's also like a lot of industries where, like we sort of assume that management is like a static thing and you have good managers and bad managers, but over time, like best practices improve and people, there are lessons that are learned along the way. People don't just forget stuff. It's like,
Mm.
and if you want to be a manager, then you learn about this stuff. And I guess there are some mistakes that repeat. But, uh, but yeah, I mean, most industries, I guess the management teams of today versus 50 years ago, you'd assume would be better on
Yeah,
average.
yeah.
Um, for most
Unless
things, yeah.
for most, yeah, I'd say there's a few exceptions there, but for most, I think that's probably correct. Yeah, and you're right. There's a cumulative knowledge that builds. But Graham, I take your point. I think it's been fairly obvious that gold has been poorly run for a long time, and whatever the reason, it does appear to have turned around. Gold went, and I think it takes a crisis to turn these companies around. So mining had the worst commodity downturn in a generation. I think it was around 2013, 2014, 2015. And in those years, they were forced to be very lean. Boards brought new management in, and that's when changes really started to happen. And the same thing happened in the gold industry, where there was a savage downturn that really hurt gold miners across the board, and a similar sort of clean out and change uh, began after that downturn. Um, that I think you can always point to those sort of crisis moments that lead to improvements. But that brings us to Evolution, which was, I think, one of the first miners to start managing their businesses properly. And we've gone through I wrote up Evolution earlier in the week, and you can read that review. And it goes through the history of the founder of Evolution, Jake Klein, who, funnily enough, um, neither of you will remember this because this happened when we were in the old Bondi office, but we actually shared an office with Jake's earlier business, which was Conquest Mining. So Jake made a fortune building up a Chinese gold business called Sino Gold, which he built in the 1990s. He used to be a Macquarie banker before then. Then he decided out of the blue to run a Chinese gold miner. And he sold that thing for over $2 billion, came back and started this and joined this tiny little mining business called Conquest Mining, which had nothing, just a cash box. I think it had one meager asset and not much else. And they actually shared a building with Intelligent Investor in Bondi. And I remember seeing Jake in the elevator, and Greg Hoffman actually pointed him out and said, "Oh, that guy just sold a $2 billion business. You should go talk to him. He's doing a new business now." And I looked up Conquest and I saw it had nothing. And I thought, Greg, why would you want me to talk to this business? They don't do anything. And later on, a few years later, Conquest became Evolution through a series of deals, and it was worth about $500 million at that stage. And that's when I actually reached out to Jake Klein, and we did a podcast together, and I met him, and he explained Evolution and the philosophy. And even at that stage, I thought, okay, well, that's interesting. They're doing something different. Sounds like a really good manager. But I always thought the asset quality was pretty poor, and I was not really interested in gold. And now, when it's an $8 billion business, now I think I've finally come around, and I think it looks quite interesting now. Any questions so far, gents, or shall I continue?
No, that was it's a good story, isn't it? It's just so hard to pick these things until people have a track record, I guess, is kind of part of that as well. But
Well, I think this is one of the tricky things about gold miners, because traditionally, even 5 or 6 years ago, I would have thought the management of gold miners is less important than their mines and their assets. And I didn't really understand how important capital allocation was in gold miners. And that's turned around. My view now is that management is just instrumental, maybe more important in these resources business than in traditional businesses, because you're dealing with a declining asset base. And so how you allocate your rare free cash flow is actually super important in maintaining the value of your business. So
How
it's
does
become
this business use its free cash flows?
really, really well. So they've grown a really modest resource base, and they started off with quite poor quality mines, and they've milked those mines for cash, sold them, bought better quality mines, and iterated that process a handful of times. So they've actually sold 4 assets and bought 3 assets in their 10-year history, which is quite a lot of activity for a gold miner. And in between, they've run those assets really well, generated lots of free cash flow. In the last 3 years, they've generated more than $1 billion of free cash flow. And gold has been reasonably high last year, but it hasn't been crazy high. I don't think we're talking about boom conditions here. It's not as though I'm boasting about iron ore prop miners generating free cash flows at $200 a ton iron ore, right? I don't think we're talking about that kind of boom. And Evolution, in fact, is now the miner that generates the highest free cash flow per ounce of production in the world. It pays the highest dividend among any peer in the world. And it does that with an asset base that on the face value actually looks quite modest. And when I started looking into the mines a little more closely, a few things stood out about the mines that Evolution selects, and they tend to be mines that are geologically very simple. And I think that's something that miners get wrong sometimes. So if you look at a business like Newcrest on paper looks amazing. It's actually the lowest cost gold producer in Australia by a mile. It has the largest reserves by a long shot, and it has huge mines. I think 3 of their assets are actually in the top 10 mines in the world by size. So they're absolutely enormous. But because they're so complex, they require a lot of reinvestment, really large processing facilities. Problems occur all the time, and they have to have custom-made power, custom water. They don't have sealed road access, and that all just adds to complexity and cost. Whereas Evolution has sought mines that are just very simple to run. And a good example of this might be their largest asset, which is in New South Wales, and it's known as Coal. I actually visited the mine a few years ago when it was under its international owners. I think it was Newmont, I think, owned the mine back then. And this was about as easy as gold mining gets, really. It's one big hole in the ground. It's got sealed roads. They got grid power. They're on the edge of a lake, so there's plenty of water. And you might think, well, what's the big deal? Why does that matter? A large gold mine will consume as much energy as a medium-sized
Bitcoin.
town. Well, or as much as several Bitcoin these days, yes. They really add to costs, and moving material around on dirt roads really adds to cost. Geological simplicity ensures that you can run your operations using bulk mining techniques, which reduces your per ton costs. These things, they don't scream out in the headlines, but they make a lot of difference to the bottom line. And I think Evolution uniquely doesn't focus on those big headline numbers like grade and size, but they do focus on how much free cash flow comes out of their assets. And when I was calculating the average returns of these assets, I mean, it was quite extraordinary. What looked like quite modest assets on paper were often generating multi-year cash returns of 20% plus, which is really unheard of in the gold mining area. So it's a business that's doing something quite different to its peers, and it's managed with a mindset and care that I haven't really seen in gold miners before. And that's why I
Does
think Evolution looks interesting.
does management have a big stake? Is that why?
Well, not really, Graham. This is curious. So Jake Klein himself owns, what, 2% of the business or something, which is about 80 to $100 million worth of stock. It's somewhere around there. So it's
Oh,
a
is
lot
that
of
it?
money. But it's not a huge amount, right? If we heard management own 2% of the business, we wouldn't think that that's a great deal of insider ownership. So it doesn't just come from insider ownership. It just comes from the culture of the place. And a good example I found was just in the reserve calculation. When gold miners calculate their reserves, they have the discretion to pick the gold price they apply to their reserves. And the higher the gold price you pick, the more your reserve expands. And so something you see in booming gold markets is that gold miners' assumptions start creeping up and their reserves start growing, even though they're not digging anything or they haven't actually discovered more gold. They just increase their price assumption, and that increases the reserves. Evolution uses the lowest assumed gold price in the industry, and it's sort of 50% less than some of their peers. And to me, that paints a picture of a deeply conservative organization that isn't trying to present itself in the best possible light. It really is focused on generating cash flow, and the dividends have been terrific. That they've paid dividends in nine years straight. In fact, I think they've increased dividends for 9 years straight, again, which is unprecedented in this sector. And there's a big opportunity now because the share price has fallen by 25% over the last 6 months or so. And that's related to a new mine that they've purchased in Canada. And I've written about the details of that. It's pretty technical. I don't really want to go through it in the podcast now. It would bore those not interested. But I would recommend going and reading the review on Evolution. It just highlights how there's very specific steps they can take to turn this mine around. And they've outlined those steps very deliberately and carefully. And a business with this track record with acquisitions and allocation probably deserves some credit. And I think they're actually quite credible plans. So I think it looks quite interesting. I'm interested in buying it myself. I would add that I was completely alone in our internal review process, and Evolution perhaps rightly received no love because it is a gold miner. And like I said up front, we don't know what the gold price will be. I have no idea what it was going to be. And with that volatility, it's probably not a stock that we can recommend to thousands, tens of thousands of members. So it's presented as an idea. I think it's a good one. And if you're interested, have a read of the review.
Having said that, though, I mean, so it's done really well, even though the gold price has been up and down quite a lot over its time, right? So I wonder if it can be a mistake to just write off an entire sector. But then
I
again,
actually,
yeah, there's lots of businesses out there, so you can be selective, but
yeah, we see this
uh,
time and time again. So an example that I often use is Southwest Airlines, which, one thing I really dislike about value investors is the they sometimes can be very dogmatic in their views, and if Buffett has said something, it suddenly becomes gospel.
mm,
And of course, we all know Buffett said he would never invest in airlines, and that's sort of become gospel amongst amongst value investors over the last 30 years. But in the US, Southwest Airlines has been a brilliant business and generated lots of shareholder value. And I would argue maybe Qantas, Graham might disagree as the Qantas analyst, but maybe Qantas is a bit different in Australia as well. But that's probably a debate for another day. But I take your
yeah.
point, Mickey. In crappy industries, there are always businesses that do reasonably well.
Yeah, yeah, and it might even be worth paying more attention to them because I guess it does say something about the management, as you say. I mean, if there's a tough industry and someone's making it look easy, then but
Hmm.
Then they're frauds.
Well, Toyota
well,
in car manufacture is probably another one, right? I mean,
yeah,
every company in the world, every manufacturer in the world uses the Toyota production system, and they've been quite successful over a long period of time in a famously competitive business.
all right. Well, I'm putting in my buy order for Evolution now, Gaurav, so get ready.
All right, that's one person convinced. Any questions, gents? Graham, anything to add as a native Canadian?
uh, no, I'm curious about I think it's so interesting that they have the lowest assumptions for their reserves. And something just occurred to me: do they get compensated at all, management, on returns on assets? Could they artificially be trying to depress the amount of assets they hold to boost kind of returns on assets that then lead to better income or something? It seems like an obvious. It would be too obvious to get past anyone, but
Hmm.
um, yeah, that just occurred to me. Do you know how they do get compensated?
Jeez, you're a cynical fellow.
He's called a. He
I
already.
know.
Yeah, jeez.
Jeez. Here they are trying to do the right thing, and they're all always already under suspicion. Look, it's a good point though. I will check that out. And next time I write about evolution, I'll add that in some way. But yeah, I'm not sure.
Next
It's a
thing
good
you
I'm
point.
know,
sure it's just.
Graham's writing up the short report now as we speak.
Well, I had that article a while ago that gold is a bad investment even in bad times.
I think that's still mostly right, and I still think you want to be super careful about buying gold miners generally. I would call this, and I highlighted a couple of others in that article. I would call those exceptions rather than a complete change of view.
I'd probably rather own a gold miner than a block of gold.
Oh, that's controversial. I reckon value investors ought to break more rules. There are so many rules that are so restrictive in value investing. You can't buy this or you can't do that. I reckon value investors would be better served if they just shed those rules and uh, and be financially naked.
Yeah, well, I think it's just like you get given rules, but then you've got to think for yourself as well. You can't just let other people think for you. That's how you're probably going to get average results. So, but then I guess if you go out and then I guess that could also go the other way that there's a lot of conventional wisdom that is there for a reason. So it's sort of arrogant not to take account of that as well. But I kind of tend to agree. I don't know. What do you think, Graham?
Well, I don't like rules in general, but I think I think
Graham,
that
our resident rebel.
yeah, I think you can use them as you just got to use them as guidance. It doesn't mean that this could be the one gold miner that is better than the rest and deserves an investment. Uh, but equally, then there's probably a lot of value investors that have a long history of bad experiences with gold miners, so have set these guidelines that they're generally not good investment.
Yeah. Well, Graham, was this what underpins your Bitcoin long case at the moment, or?
What's my Bitcoin long case?
That's a joke. Yeah, no, it's sorry, I said it was a bit deadpan. Yeah, no. I assume you're not long Bitcoin.
If I owned a few, maybe I'd be more long Bitcoin. But no, I'm not long Bitcoin.
Okay, all right.
Why are you? There's a lot of
I'm
similar
not.
things to gold there.
Well, yeah, not really. I mean, I wouldn't have thought so. I mean,
Crazy people like it.
yeah, probably. Yeah, they've probably got the most in common. Well,
would you guys
maybe we
agree
should what? Sorry.
that would you guys agree that Bitcoin or crypto is the most obvious bubble I have seen since 1999?
It scares me if it's not a
Yeah,
bubble, because
yeah. I
the
mean,
environmental damage that it does is just obscene. That
Yeah.
if this keeps going for longer, it's just, I think it's terrible for the
well,
world.
the thing is as well. I mean, the people that are getting into it now, they can talk about using it as a currency, but no one's using it. Not many people are using it as a currency. People are
No.
buying it because they think it's going to go up, and
Yeah.
There are cryptos that are doubling daily. You can't
yeah,
use that. You can't use that as a currency.
with
It's
names we
moving.
can't say on the podcast.
That's right. We all we know what they are. Yes. Yeah. I don't know. You think about everything we've learned about bubbles in our investing careers. All the bubbles we've seen, this ticks every single box. There is crazy irrational behavior. There is wild speculation. The fools are making money. Complete inexperienced people are up on the street trying to get in on it. Every box is ticked. This is the
The
most obvious
crazy
bubble I've
thing
seen.
The crazy thing that I see about Bitcoin is that there was the same arguments made a few years ago. It had gone up
Yes,
100,000% or something
yes,
rather
that's
ridiculous. I
right.
can't remember the exact year, but
Yeah.
it's like we had the bubble, it popped, and then people were convinced again.
Mm.
Yeah, it
Yeah.
makes me wonder.
Well, I mean, yeah, because I guess there is the argument that it's like a digital gold or whatever, and so if we get like all this inflation and currency isn't worth anything anymore, then at least you got your Bitcoin. But I don't know if governments are going to let people transact in Bitcoin, or if it really comes down to it, like government would just take back control of the currency. I would have thought.
Mm.
So I don't know. Yeah, but yeah, I just think people you're buying it to make a quick buck at the moment, and that's probably the biggest sign. But yeah, anyway, we're probably going to get like 1,000 emails from people now,
Yeah.
telling us we're this is
Well,
this is why we stick to stocks.
but that's also the level of vitriol and hate. If you criticize crypto, that's also part of the bubble thesis. That's exactly what happens. You go back in '99 and you talk about some of these .com stocks, and you call them frauds or you call them bubbles, and watch how people come after you. Um,
Yeah, when you run out of
ev-
facts and
every
evidence, you just revert to name calling.
well, that's right. Every bubble is characterized by this sort of eh, impassioned behavior.
And I
But
don't
anyway,
get the only argument that I see is the whole scarcity idea, but I don't find that a very good argument. There's lots of things that are scarce in the world. First to
and is
mention
it
Justin
scarce
Bieber
because
albums.
and is it really scarce because there's so many cryptos just popping up? Anyone can really
Yeah,
create
it's
one.
substitutable.
Yeah,
That's important too.
Yeah.
yeah, yeah. That's a good point. Well, we should have a crypto episode. Jeez, it'd probably be our most listened to episode, really.
Oh,
Yeah, I
and
know.
we could buy one at the beginning of the episode, sell it at the end, and see if we've made anything. That can
It'd
be
be,
our evidence.
No, you got
it'd
to
be
hold it to the moon, Graham. What are you talking?
Bitcoin
Selling?
1
What is
million.
a sell business?
it'd be such a short podcast. It'd just be us saying it's crap. It's a bubble.
Do
And
you
then
guys see any merit whatsoever in any of the underlying arguments? Say, you say, the people maybe not buying it today, but buying it, back at when it was, in its infancy.
I can see good arguments for the blockchain technology, having a distributed ledger. That makes sense for lots of different businesses and uses. But in terms of Bitcoin specifically, I don't see any merit in that.
I would have to
Especially given
agree.
its energy intensity, that it's not even practical as a currency or as any kind of transaction.
Exactly.
It just does not make sense to me.
And it's hilarious that millennials, and I think actually a few of us on the podcast are millennials. I think I am actually, technically. But all these people who are so concerned with ESG and ethical investing are the same ones buying crypto.
Yeah.
Amazing.
Yeah, yeah.
Without
Well,
any hint of irony or
well,
hypocrisy.
yeah. I mean, there's a lot of that stuff going on. Yeah.
Right.
Hey,
This is
sorry,
probably
that was just
this
adding
is
nothing to that conversation there, but
and
yeah.
this is way more talk about crypto than we probably wanted. So let's carry on. And Mickey, that
All
brings
right.
us to Vista, which has actually been a relatively strong performer in recent months. Even though, am I right in saying that the operating metrics haven't quite recovered yet, but the share price has? Tell us what's going on with Vista.
Yeah. So I mean, so we obviously, so Vista's a cinema software maker, so they control a massive market share in global cinema software, and we upgraded the stock back in, I think it was September last year. Kind of attracted to a lot of those qualities, and I guess it kind of just traded sideways for a while. It was kind of up and down. I mean, obviously they're going through a really difficult time because a lot of their customers are under the pump, and um, some of their customers are actually in restructuring. They're not actually paying their bills, or they're getting a bit of a holiday from payments, and then on top of that, there's maybe newer chains that aren't outlaying capex on new software. So you've got this kind of existing customers aren't paying, new ones aren't making any decisions, and then you've got a small number that are actually permanently closing as well. So basically, the problems for Vista very much related to the macroeconomic situation, and to kind of their customers and how they would pull through. Um, and then so I think basically what you're seeing now is just that economic situation is improving, and people can start to. Back in September, we hadn't really had news of the vaccine, and things were very, very uncertain. So people tend to assume the worst, and now people can start to see that actually, people aren't going to be kept inside for forever, and probably they're going to be coming back to the movies. So I think that's it really. And then there's been a kind of a trickling out. The headlines back in September were like the cinemas are dead. Studios are
Yes.
releasing direct to consumers, and so it's over. And then now we're starting to see this trickle of news that people are actually coming back to the cinemas. IMAX, for example, said that Asian crowds have been really good, and they're recording growth now for the first time since the pandemic. And that's just going to start to become more and more the case as movies return, and as people are allowed to get out of the house. And I don't think anyone's going to want to sit on the couch and watch a movie. I think people are going to be getting out there and doing anything it takes to leave the living room, to be honest. So we kind of forget here in Australia actually that
Yeah.
almost half the world is still in total lockdown. So
Yeah, we're still in
yeah,
lockdown here.
well, we forgot about you.
Canada, the
Yeah.
forgotten country.
Don't worry, I was in the same boat for a while, but not obviously not to the same extent. But so even by comparison, Melbourne got off pretty lucky compared to many parts of the world.
Hmm.
It wouldn't surprise me if for cinemas or for travel and all of those things that we've been deprived of, if there's some sort of super reaction on the other end. I know for me, I'm dying to go to the cinema to go travel and do that. So I wonder if there's
Yeah.
a few more people out
I
there who are
agree.
just
For
going to.
me, the cinema is the one thing I probably miss more than anything else. I'm dying to go and watch a Marvel superhero movie.
Yeah.
I collect points through my credit card, which gives me free cinema tickets, and it sends me an email every month telling me how many I've got, and I've got 42 free tickets.
Wow.
Because they've just been accumulating that I haven't been able to use them. So there'll definitely be a rush of one Canadian to the cinema once they open.
Well,
Yeah.
Gray might single-handedly save the industry.
Well, yeah, I think there's a lot of people in the same boat.
Well, the evidence is pretty good actually. So the Chinese cinema numbers have been really good. I think they had their highest ever January this January. It was even bigger than pre-pandemic levels. So
Yeah,
there's
right. Okay.
a rebound happening in China. And the content makers, the studios are now releasing films back into the cinema platform. So I think King Kong versus Godzilla has been the biggest grossing film of the year, and that's quite a big budget uh, action flick. And they had the option of launching that just on the streaming service, but they went to cinema, and it's been quite successful. So that's probably set up a lot of other studios to continue to release more product.
And it wasn't even that good a movie, so it means that people are just going because they want to go to the cinema.
It wasn't a good. Are you crazy? I'm dying to see that movie. Looks awesome.
You might be less
Two
dying to see it
monsters,
once you start watching.
two monsters fighting each other. The cinema doesn't get any better than that.
It's highbrow, is what it is. It's
Yeah.
Are you going to take your monocle, Gaurav?
and my top hat, yes.
Yeah.
So, oh yeah, so this is about Vista. So Vista Group is so recovering basically. So hopefully what will happen is that the cinemas come back online. I think also there would be some bankruptcies for some of their customers. However, even if they come under new ownership, the quickest way to get them back into making money is to just turn the movies back on. So,
Yeah.
and they'll need software for that. So, I think it's basically a temporary thing. And I think that movies will come back. Basically.
Mickey,
So
do you
does
have
Vista
some?
earn money as a
What do you
sorry,
think, Dan?
does Vista earn money as a subscription, or is it based on the movies that are being played, or how many people are watching them, or what's it actually tied to?
Yeah, so there's an upfront kind of like licensing fee, and then there's an ongoing maintenance fee. That's for the kind of on-premise software. They're transitioning to this software as a service model, so they're putting everything into the cloud soon, and that will just be kind of a recurring fee based on the number of actual screens in the premise. So everything's tied to the number of screens that they're servicing. So that's kind of the revenue model. Yeah.
Hey, Mickey, do you have some insight into how much capex might be required for the actual product? Because I think they did come out, was it last year or recently anyway? They did say that they had to spend more money on software development because it had lagged.
Yep. So they basically so they were planning to kind of fund that internally, and then COVID happened, so they did do a pretty sizable capital raising, and so now they've still got, I think, 65 million in cash,
Right.
which they've said will be fine to get them through definitely till the end of the year.
Mhm.
And that's under a very worst case scenario. So when they raised the money as well, they basically said, this is, even if all our customers don't pay us until the end of 2021, we'll be fine, and that'll see us through. It turns out conditions have actually been better than they thought, so they probably raised a little bit too much money. But what it does mean is that that transition period is covered, and they should be fine to finance that. They've also done a lot of cost cutting as well. I think there was a lot of I think there's about $20 million in costs that they actually managed to pull out of the business, as well, to kind of reduce that ongoing expenditure. So I think that they think that they're okay now to kind of see through that process, and they're about to launch that new SaaS product, I believe, this year, and
Mm.
so that should start to bring in some revenue as they transition pre-existing customers across.
And finally, I mean, I remember you saying they had about a 50% market share globally. Do we have some insight into what the competitor is doing? Have they gone under, or have they raised money? Do you know what's going on with them?
Well, it's hard to get information because they're mostly private, small, and they're kind of very niche. Like there'll be like one that services a few chains in Eastern Europe or something.
Okay.
So it's hard to get information. What you can probably assume that they were in a similar position to Vista in terms
Mm.
of cash flow and in terms of actually collecting revenue and in terms of their customers going through a lot of trouble.
And probably
So
didn't have access to the liquidity that Vista had access to, right? Vista had to raise a big chunk of money.
yeah, that's right. Yeah, exactly. So if they're in that situation, then where are they going to go? The owners have to either put in more money, or maybe
Yep.
they don't do anything. So most likely they've been pulling back on product investment, and at the same time Vista's been um, going going in a lot harder on the product investment, and so that just means that when things do normalize, when that time comes, that Vista's product should be absolutely market leading, and even more so than before.
Mm.
And they should just be able to continue taking market share from those competitors. So you can see that even growing over time, even from that very high level already. And they really are just so far out in front now that it's hard to see anyone else really catching up.
So, Mickey, my final question is actually a really tricky one, but your price guide, one could argue, might look a bit conservative, given they've probably survived the worst now. We're coming through it. They've got plenty of cash on hand. And as you say, products improved. Is there a case for lifting that price guide a little? Or is
Well,
there something you're particularly concerned about?
no, no. Well, I don't really. Tricky thing is, it's still very unclear what the economics of the business are going to look exactly like in 3 to 5 years' time, because they are
Nice.
going through this transition,
Right.
and because they've obviously gone through this period where they've it's been really difficult. So actually, kind of forecasting out is not like an easy thing to do.
Mm,
So I think it was more so that when we upgraded, at $1.70, it was a pretty straightforward case, because it had the same enterprise value as it did in 2015,
mm,
but we thought maybe it could do 2.5 times as much sales when things recovered. So
mm.
there's a pretty simple kind of calculation, and so we'd probably now that we've bought well, we'd probably just be happy to hold on, but we'll kind of reassess that price guide, I think, as things become a little bit clearer. And I don't think we need to be too exact, and we just have to ride out this little period, and hopefully, and the company is planning to also release more metrics in the next result around unit economics that'll help a little bit more with that as well. So
Nice. All right, excellent. Sounds good. All right, gents. I think unless someone else has another rant against something people beloved by everyone else, we should probably end it there. By the way, you can send all your complaints about crypto to Mickey himself.
yeah, I've got a pretty good spam filter. So, but yeah, feel free. I think
You
Graham's
probably.
the man, isn't he? Graham's the Bitcoin bull. So.
I thought Gaurav was. Maybe we should invest in a Bitcoin miner.
Oh, now you're talking.
Bitcoin miner. Wow.
The
Okay.
best managed Bitcoin miner in the world.
Well, I tell you what, the ideas are getting crazier and crazier, so it's probably time to end
To
this.
load up.
All right, Graham, thanks for joining us from Vancouver. Hope it's not the crazy time over there.
Thanks, Gaurav.
All right, we'll talk to you again. Mickey, thanks for your time.
Thanks.
And for everyone else, thank you for listening.